of it takes us to our talk of the tape. What it will take to keep stocks moving even higher from here. Let's ask Fundstrat's managing partner and head of research, Tom Lee. He is with us live today. Tom, welcome back.
Thank you, Scott. Good to see you.
Yeah, you too. This is a remarkable market. What is driving this, and what is driving this continued acceleration as we hit this final stretch today?
Scott, I think 2024 is revealing the stock market is getting stronger because it is proving to be extremely resilient. You know, last week Tesla missed, fell 11%. The S&P was up for the week. This week we had two big fangs miss and disappoint, and the market's, of course, roaring as we end the week. It's the 14th consecutive week. I think it has a lot to do with, one, the economy's incredibly resilient. The Fed, I think, has turned dovish. We don't know the timing of the first cut. Inflation, I think, is falling basically like a rock. And we know there's a lot of cash on the sidelines because there's over $6 trillion sitting in money markets. And yet the S&P, you know, is just in the last 6 weeks generated more return than an entire year of owning money market cash.
Yeah, it's been unbelievable. So March doesn't matter? I mean, is that the lesson of this week?
Yes. I think, I think the bond market really cares whether it's May or March. I think that the stock market really should just care that the Fed has gone from fighting inflation and almost giving the economy a heart attack to one where they're trying to manage the business cycle. So if they don't feel comfortable doing this cut in March and instead of May, I don't think it should have any effect on equities and how they do today.
The interesting part, I guess, is what you allude to. It's sort of this change in focus of the Fed. And I think Chair Powell alluded to this as much in the news conference when he cited, I think on multiple occasions, the strength of the labor market is not necessarily a bad thing anymore, so to speak. They don't feel perhaps as though they need to really lean on that to get inflation to come down because they've been surprised to the degree that it's already been coming down.
That's right. I mean, I think the biggest evidence this week was the ECI, the Employment Cost Index. You know, that number came in very tame, and Fed Chair Powell barely mentioned the labor market in the last press conference. I think it's because the job market is still adding jobs. I mean, today was a big surprise, but the unemployment rate's not really falling precipitously, and it's not creating a lot of wage pressure. So far, I think the labor market isn't going to be the source of the concern for the Fed.
Yeah.